We're talking about a decentralized
The supply of dollars can never be sufficient to satisfy the debts that it creates.
Connor Hatcher from MainTrade. How are you today, man?
I'm great. How are you, man?
Yeah, good, man. Really excited to jump on this chat with you. I've spoken to a whole bunch of different people. I apologize, you might hear my nephew in the background making some noise. I've had a whole bunch of people on from traders to tax experts in Australia, and just really interested to get your perspective on crypto overall. But I'm very keen to hear about what you're doing with your Discord and Shrimpy and Telecom, right? Telegram,
yeah, right?
Telegram, not Telegram.
Yeah.
So, tell us a little about yourself and how we ran into each other and what you specialize in.
Sure. Yeah. From Oklahoma, I studied computer science, switched to data analytics. I'm currently working at a college that I'm doing my data science degree in, and that's pretty much it. Got into crypto. I've been in it for a while, since I was younger, right out of high school, and it piqued my interest. So it's been 2015, I guess.
Yeah. Okay.
So,
did you see it and you're immediately like, man, I got to buy this as an investment vehicle? Or were you more like, look, this is interesting, let's look at what the underlying tech is? Like, how did you approach it and when you first heard about it?
It was mainly the tech. And at the time, I couldn't afford any mining rigs or, just a normal gaming desktop to do anything. So it's mainly just reading and learning about, hashing and all that. And then back then I could see, I didn't think it would get this far, like so quickly, but everything kind of, you blink and it just escalates so quick. So it's been very good.
It's like this perfect recipe of like self-fulfilling prophecy with this amazing new technology. I think because the price is attached to a lot of cryptos, of course Bitcoin in particular, you have like people that are buying it for an investment, but that's driving the price, which is driving things to get talked about a lot more, and that drives the tech and everything else. Like, it's just this perfect storm of tech and investment and money and everything together. But I do find it interesting that a lot of people that I've spoken to that are leading this space, and whether that's in a startup or through what you're doing with this trading group, these algorithms, like a lot of those people tend to have started in crypto with the tech in mind first.
Yeah.
I think people that have started as investment, maybe I'm one of the rarer ones, but then again, I'm not really leading anything aside from the podcast channel. But I bought my first Bitcoin at $50 in 2013 or something, and I was just fascinated by the investment part of it. So hang on a second, this is money that is harder than anything else.
Yeah. Being so young, it took me a while I kind of realized it early on, but I didn't really, I guess I got on Bitcoin Talk back then, but it was, I really don't know what I was reading or getting into. So, it's been very cool.
Yeah, right on. So you discovered Bitcoin. You're like, hang on a second, this is something cool. I want to learn about hashing and all of that. How did you go from that to what you're doing now?
I kind of just left in the background. I had school, and I was traveling different places, and being young, I just, used my time, and I made some money from Bitcoin, and I traveled, different countries and stuff, and I just kind of forgot about it.
Yeah. So I guess I'm curious as to, because obviously you started thinking this is cool tech, like let's do something with this. You maybe made some money from it. You said you went traveling, right? How do you get from that to, well, can you actually, why don't you tell us a little about what you're doing now? Yeah. And then we'll kind of piece together how we got there.
Okay.
Like with MainTrade in particular.
Sure. Yeah. So we started, I started getting interested, and I guess Shrimpy was the main place that I met pretty much all the people I talk with now, maybe over 20 people. We started Shrimpy is a portfolio. I don't know if you've ever talked about it, but the Shrimpy's a portfolio manager, and he just simply rebalances with threshold allocation percentages and periodic. So they have a chat group there, and I met a lot of people. We had a side group because everything was moderated. We couldn't really say what we wanted to say. And from there, we just shared our trading activities, what are we doing, our novice TA and stuff like that. And we tried about 20 different trading platforms, even ones that have like 50 users on them and they're very niche. And none of them made us happy. So, and we're inspired a lot by Ben Cohen too. We always followed him. And so we kind of decided, okay, what do we want, for our group?
Who's Ben Cohen? Sorry.
Ben Cohen he's a popular crypto YouTuber.
Oh, okay.
He does he makes the risk metrics and a lot of trading view indicators. And I think he's been on since 2019. Now I didn't start. Well, I've been following crypto for a while, but not so much investing. I just I like Nano and stuff like that. Just I like the simple utility of just.
I do remember Nano.
Yeah, and so I followed a small amount, and I didn't follow the big ones. These other ones that came up, but So originally, we just kind of thought if we could make a business out of it, and see if we could bring in other people from Shrimpy and our friends and family, because that's friends and family is kind of like who we wanted to share it with, because we didn't want to. We wanted them to get into it as well. So, what MainTrade is it's right now it is just a dual momentum trading platform. So that's what we're aiming for. And what dual momentum is you take the return on investment from different time periods, and then that you'll calculate a momentum score. And if the momentum score is higher than Bitcoin, then you'll just choose the top 10 or whatever amount of coins you want to trade with, and you'll choose those as your portfolio. And then every 7 days, 5 days, 3 days, 2 days, 1 day, depending on what your days you use for your momentum to calculate your momentum, you will set that as your balance period, which is typically in the weighting around like the first day time frame that you use. I don't know if that fully makes sense, but yeah. And so ultimately what this does, this trading strategy, is help remove the drawdown of the market by picking the coins with the highest momentum, and without decreasing the return. You still ride the waves of the market, but you can avoid choosing bad coins to get into.
Yeah, absolutely. I mean, the whole dual momentum stuff is fascinating. You explained it well. So basically, you've got a period that you're judging the performance of a coin on, which is your momentum score. And that can be over a 7-day or a 5-day or even less or even greater period. And then you're readjusting a set period, right? You can readjust every week, every 5 days, every 3 days. Have you found that the sorry, a bit loud. Have you found the actual adjustment period that there's vast differences between how often you're doing that? I mean, I personally have played a lot with the 7-day time frame just because scheduling it works well. But have you found that 3 days is much more effective?
Yeah, 3 days. Yeah, 3 days is it's more effective. For some reason, it's just the returns are just in the higher percentage. You'll see higher returns and more of them compared to even 2 and 4, and doesn't really change. And that's pretty good considering 1 and 2 you'll have more fee costs due to more rebalancing, and that I'm sure I never tested 6-12 hours. I don't think it's worth it. It's kind of like you're in the same, most likely a point. My thinking is the reason why I don't even do that. 1 did not do very well. So I didn't think in the back test, 1 day didn't do very well compared to 3. And even 7-day wasn't too far behind 3. And so I'm thinking doing 6 and 12 hours or even 3-hour rebalancing for the portfolio, you'll just incur more fees because you're still choosing the same coins. Maybe you're changing allocations based on volume, but ultimately in 3 days, you can have the same coins you started. They started with on the 3, and you're going 3, 6,
so with
9 hours, 12 hours.
With the shorter time frames, the 3-day rebalancing as an example, are you judging that? Is the momentum score based on performance over the last 3 days, or is it still a 7-day period or greater?
You can still do, let's say, with the like a trifecta of like, let's say you can do like a 7-day, 14-day, 30-day. You can do a 3-day rebalance off the 7-day. But typically 6 would work best from what I've seen. And you could, even with 7-day, 4 and 6 days for the first day anyway, were the best ones. And there's some outliers too. And I don't think it necessarily depends on where you start it. I think you can start it whenever you want to, and you'll still have a similar outcome. So either if it was a day before or a day after, you will still have a similar return on your investment. Yeah, but ultimately, you just want to avoid fees and taxes. Yeah, so
that's where the balance is got to be struck for sure. It's interesting you talk about 6-day periods for judging of the performance, and then 3-day rebalancing works best. Like I did a small back test when I first was researching momentum trading, but ultimately decided to just forward test and just went, fuck it, let's just go. Let's just dump 0.1 Bitcoin in this fund and see how it does. And within a year or so, it had tripled, which is cool. Of course, we're in a raging bull market, so you got to take that with a grain of salt. But I wanted to ask you about performance versus Bitcoin. You're talking about a momentum score that is in US dollars. And then if the Bitcoin momentum score is higher, you're moving your allocation into that. I have always done the performance is judged against Bitcoin. I guess it's the similar thing. Are you allocating everything to Bitcoin as soon as that momentum score pops up, or are you doing a smaller portion?
So it would be so how we would do it is a smaller portion, like a certain percentage of allocation towards Bitcoin, or so if we have 10 coins and 4 of them share, let's just say 4 of them are 40%. Let's say, there's 10 coins, but 4 are outperforming Bitcoin, but there's no others outperforming in whatever market you're in, like or exchange you're in, like Coinbase or Binance. If there's only 4 coins doing better, then you will set the 60% towards Bitcoin, and then you'll be hedging the rest of the missing pairs into that while writing the other 4 altcoins.
I mean, I guess that's where the kind of art comes into this, because it's not as simple as like two single variables, 2 binary variables, and then, moving your allocation to that. It really is like you've got, your performance period, you've got your rebalancing period, but you've also got how many you're allocating your portfolio. You're doing 25%, you're splitting equally, or are you splitting unequally where you have like to the top momentum, you're allocating more? How many different assets are you allocating to? So there's all of these different variables, and it's really a little bit of, artistry, really, I think, because as much as you can back test, it's never going to be a guarantee that it's going to be still the best performing moving forward. So there's some preference there that needs to come in. Like that's why I do the 7 days, because every week I'm sitting down and I'm like, okay, let's do all the rebalances. For example, in about an hour or two, I got to do all my rebalances. So, sit down, takes me half an hour. I do all of I've got about 5 different portfolios running with various different strategies and stuff. It's very interesting, man. So where did you first learn about dual momentum?
Actually, I saw it from, I guess doing trading strategies, and I wanted to figure out how to remove drawdown, because drawdown's the worst, and we want to avoid that. And so I found DCA. I was in DCA bots for a long time. I still do them, just because hedging towards them, like in down markets, are pretty good. As when they come up, you'll get some accumulation, and if the trend changes, you can just stop it and go to a more bullish strategy. So, but I wanted something to where I don't have to switch my funds all the time, and it's so much moving. I don't have to go to a yield farm or something. So I was studying that, and I just ran into dual momentum, and just doing Google searches, and where I found most of my algorithms are from just Google searches. Even the risk metrics, which Ben doesn't tell people where he got it, but I know where he originally got the idea from. And a few people I've seen that shared theirs with me are sort of similar too. There's a lot of ways to do it, but dual momentum is I want to say his name right, is Gary Antonacci or Antonici. This dual momentum has been out in traditional markets since even I think the early 1800s or the late 1800s.
Wow.
They've done tests on traditional markets. So I think it's like around 1890. So, and he just found this research and he just brought it back because no one did it. They did the research back then, but they're like, eh. And so he was like, well, they already proven that it works, but no one wanted to use it. Maybe there wasn't a really big use case back then, but now with, I guess, technology,
I think
what
probably happened is like they're trying to figure out markets and market psychology. So they find momentum and they're like, oh, this kind of works, but it really only gives us, maybe 5%, 10%, 20% edge. Let's find something better. So they go around, they start, trying to find all sorts of other ways of beating the market, all of which fail, of course. And so like you've got, and then by that stage, you've completely forgotten about that first one that actually worked.
Yeah.
Gary's actually written a few recent articles about Bitcoin, which I find really interesting.
Oh wow. Okay.
Yeah.
That's
so
surprising.
maybe one day I'll get him on this podcast and we'll be talking about crypto momentum, which would be cool.
Yeah, that would be actually very cool to hear his thoughts on it, because it moves so fast. His is he does 3 months, 6 months, and 12 months for his trading strategies with traditional markets, and it's with crypto, now you're thinking, 7-day, 14-day is so much faster. You got to adapt really quick to it. So
yeah, there's I think a lot more people now are trying momentum strategies, but back when I wrote about it on Medium, like maybe a year and a half ago or something, there was really only 2 like research papers on momentum in crypto. And one of them was kind of just supporting metric side of things. And the other one basically came to the conclusion that I believe it was shorter time frame, the better, 7 days or something like that. So that's why I went that way. But, there's so much more research to do there. What is optimal is still up in the air. That's what I find so exciting about the space.
Yeah. Yeah. And you can't I don't even know. You can know from past history, and you can assume that as we move towards traditional markets that you may have to set your rebalance time further and stuff like that, because more than likely just the market cap goes up, with diminishing returns and the market slow down, that you'll need to optimize your portfolio. I don't think too much. I think maybe like once a year, just change your strategy, see what works, and see you can see the difference between the different back tests and get some different variables there. But
yeah, there must be an equation. There must be a formula to work out using market cap and maybe volatility what would be theoretically optimal rebalancing periods. Because, as you said, crypto being highly volatile, much more so than traditional assets, you have a much shorter time frame for those rebalances and those performance periods. Whereas, of course, traditional assets, stocks, bonds, index funds, etc., all of that stuff needs to be long time frames. As you said, Gary and who's the other guy? Brian, someone from Muscular Portfolios. Same thing. It's like the average of 3, 6, and 12 months. Yeah. That's really where I started with my journey. Like, that's why I made that website we've spoken about, fucc.io, which kind of lays out, 1 week performance, 1 month, 3, 6, and 12 months, but then also a column for the average of 3, 6, and 12, which turned out to be much less lucrative than just doing the 1 week.
Yeah. And that's what helped me get into Avalanche. And I'm very thankful. I'm very thankful for that showing me early on. I saw eGold and Avalanche, and I go, oh, these are 2 new gems here. Because they were just sitting at the top charts back in, I think, like November, and they just started growing. And I was like, okay. And I did my research on them. I'm like, oh, these are the easiest scores I've seen, and it helped me out a lot. And it's good to where, like a screener, you'll see these coins that are doing so well. And what I like to do is, like, newer coins, I'd never heard of them before. There's so many coins to even study, but it helps you take away the noise. You can go, okay, these coins are averaging in the top 50. It's like, why are they here, right? And so you can then do your research and see, oh, I can see why this is gaining traction. And then then you can do your own, hypothesis on where to get in and, where it will continue to grow. But it's very helpful.
Yeah, it's a good way of cutting through the noise, I suppose. And, that brings us nicely to the other metric that we have. I mean, I use in your spreadsheet and through MainTrade, like, what is it? The risk score. Because, of course, so the risk score basically is an indication of how risky an asset is. So you can kind of take momentum, assets that have really high momentum and growth, and, compare that to the risk score. If the risk score is really high as well, then maybe it's not worth jumping in, because it could just be, the momentum score could be really high because somebody's pumped it up for some unknown reason.
Yeah. Yeah. And the risk score is basically it just weighs the volatility pretty much. So it just compares past move to present moves. And the current one I have, which I do have it. It's just hard to by myself. I'm the only one who really understands it on my team as far as like math and algorithms go. So, and the only like backend developer. So it's hard to bring people on to help me out with it. But it you can set it to where and weight it with diminishing returns, which is pretty much just weighing everything evenly. And there's another way, which I don't want to give away too much, but you can kind of even out the scores you get, and then what I do is normalize it from 0 to 1. You could do 0 to 100, but if you weight everything evenly, and you set it 0 to 1, then you'll get a nice view on like the moves a coin makes from day to day, to where you would think like 100% would send it to high risk, but in reality, a coin's done 1,000% like in a week, right? And so 100% is nothing to what the coin can do. And it's not like Cardano, like it started at 2 cents and it goes to 1. People are, oh, this is too risky, it's going to come back down or whatever, then triples, goes to 3, and finally it's come back down, finally. But
and now it's just dying a slow death.
Yeah, unfortunately. I think it will recover soon, but
it's become the new Ripple, man. It's the laughing stock of coin market cap.
Yeah. It was it's back to being a stable coin again. It had a good rise.
Yeah. It's the $1 equivalent. Yeah.
Terra seems to be the hot one now.
Oh, what's that? What's the code for that?
Terra is Luna.
Yes, that's right. Yeah.
So a lot of I guess advancements in different DeFi protocols going on there. Different ways yield farmers can do stuff. So it's been getting really big. It's cross chain too. It's on Cosmos IBC.
Yeah.
So it automatically integrates with like Solana and Cosmos and Osmosis and all the blockchains using Cosmos IBC. So
okay, yeah,
it's
nice.
Instant multi-chain integration. So
I mean, I spend a lot of time, looking at the crypto space in general. I really need to spend more time looking at individual coins and their kind of use case. But yeah, a lot of my motivation is I don't care about the project. I don't care about the fundamentals. How is it moving and where is it moving to?
Right.
Because that's kind of the power that momentum and analyzing price through that lens. That's the power that it gives us.
And I wanted to share that most of what we do is some of it's on volume, but most everything is based on price action. So a lot of people say you need to go on chain or something like that. But I mean, the price is the price, right? So, I mean, on chain can help you, I guess, make predictions, I guess. But I mean, doesn't help you know where the price is going to end up. So it's just a lot of assumptions, right? And the price is the price, and it's a real, it's, you don't have to assume that. So it's a lot easier just to go off by that and put a strategy around that than come up with a very complicated, a very conditional bot, because you may get 0% drawdown, but you also get like a 10% return.
Yeah.
At the end of the year. So it
I mean, it really is going to be that drawdown, and how I'm really curious to see how these momentum strategies forward pace into bear markets, because for the last year and a half since I got into momentum trading, altcoins have done really well. We had probably about 4 or 5 months there where everything was coming down, and certainly my portfolios were hit. But I mean, I don't think they were hit as hard as the general market, particularly with a lot of shit coins. But the growth is it's accelerated. It's very interesting to watch,
Yeah. Some of the back tests I did, and I'm not going to use the high quantile ones that, 0.1% goes 100x or whatever. There's some cases like that, that, the top 2% hit 90 to 100x, but after those, there's a big drop off on performance to where, those were just the perfect ones. And how I do it, we do 6 million back tests. And then we just break up and to where you can do like a regression line of all the different return on investments. And from there, you can see these are the top ones. And then you just compare which ones show up more frequently across all different rebalance timeframes. And then from there, you can see, and if the average is 30x between all this, you get to use the same settings across all of them. You get a 30x. It's a pretty solid, or an average 30x. It's a pretty solid choice there. And so that's how we choose which one to go with. Is you just average all out, see which one shows up most, and we just set that as the overall momentum settings for the current bots we have.
That's awesome, man.
Yeah.
I love it, man. That's very cool. So tell me about MainTrade, how listeners can jump on and interact with this. I know personally, I love the spreadsheet. You've got that on like the FAQ start page in Discord, but you've also got a Telegram group. Tell us about what you got going on.
Sure. Yeah. So we did have a site. Kind of went down. We're moving everything to a different server, and so it's just a mess right now with the holidays, and everyone on the team is gone, and with family, and enjoying themselves. So it's kind of me trying to do this myself right now. So we did have a site. It would be MainTrade.io, and we have the hub.maintrade.io. Those are not up yet, but we do have a Telegram and a Discord. And on those, we have the Arithmetric bot, which will show you the current risk of the coin, and that's queried as soon as you query it. So we'll get the latest data and we'll tell you what the risk is. And then we have a portfolio generator. If you want to use a portfolio rebalancer, which is preferred, there's Shrimpy and Quantity, 3 commas. There's a lot of portfolio rebalancers you can use this chatbot with that will generate these dual momentum portfolios for you. There we have metrics, and we also have a low risk scanning bot, which I like to use, especially when markets go down very big. I would like to see which coin is more likely to have a big return on investment from previous moves. So if the coin's sitting between 0 and 1 risk, and it's a top 100 market cap coin, and it has good history and good fundamentals, that signals a good one to buy. So that's one way you can use that. But yeah, we have a team of 5, and I guess now we onboarded a few people from the community, so we're still growing. And if someone wants to, help out or whatever, we'll bring you in and just work on it together. So, I think we have about 6 now. We all have different abilities. We're all good at our own thing, so it's been good to work with everyone. But we'll be making a dual momentum platform based off all the things you will see in the Discord and Telegram.
Yeah.
And we'll provide a dual momentum portfolios only. We have some ideas for some other trading strategies regarding DCA.
Will this be a rebalancing platform, much like Shrimpy?
It's not currently. We may expand to that. I would like to first start with a simple portfolio rebalancer off dual momentum. This way, people don't have to choose the coins to, you know, or follow a leader to get the coins. They can just follow this one strategy and go off to the races and not worry too much.
But it's all plugged in. It's automatic, and people don't have to worry about it. They just select there. Yeah, that's great. Yeah. See, I think we spoke months back about, you know, an idea that I had for something similar, where you're able to select those variables. So where you're able to select the performance period and the rebalancing, all the stuff we were talking about before. And then it automates it. But I think you're right in that having a simple strategy that people can plug into and get the results is going to be super cool for a lot of people, man. Yeah.
Yeah. And when
does it come out? Because I want to jump on that.
It's so hard. It's so hard with the holidays, but man, I'm hoping next year we are on portfolio creation. So I've been working all night on that, getting the back end for the coins and talking with exchanges, make sure the data is cleaned and stuff like that. That's the most difficult process. Porting the algorithms that we already have in is the easiest thing, but the infrastructure, making sure I know, Shrimpy, you've experienced issues with Shrimpy, and we do not want that. And so we're taking it slow, taking all the precautions to make sure when someone joins, they aren't having lagging issues and they can see their balances and rebalances go through. And and we will have advanced settings too, like you wanted. So you
Shut
will
up
be
and
able
take
to
my money, man. Shut up and just take it.
Yeah. It's going to be very cool. It's we've thought a lot in the future too, about some other integrations and stuff like that. And we still listen to everyone. So if anyone has any ideas, or we do have a feedback board, which I wish more people would use. So because I take it all in and I plan it all out on our dev board. So
awesome, man.
So we take everything into consideration. We all share ideas. So always listening.
Awesome, man. So for our listeners, that's MainTrade. I'm going to include some invites in the YouTube description, podcast description, everywhere you're listening to this, and make sure that you can jump on those platforms and get into this stuff as well. So, Connor, I do want to ask you, because your engineering genius background, what's your thoughts on the market currently? What's Bitcoin doing? Where's it heading? And where are the other cryptos heading?
I'm still, I think the market is still like halfway, I guess. It's not, I mean, as far as time, but I don't think it's bearish at all. I mean, currently we're in currently in a bear market, but I think the liquidation event, and I know everyone's talking about Evergrande, but typically everything's clocked in, at that time. So I think, the fear is high, everyone's scared, but my portfolio hasn't moved at all. So I'm not too worried. I feel like, and I see the altcoins pump. I see a lot of coins still pumping. I see even on DeFi, like not on exchanges, I look at on-chain, and a lot of DeFi coins are pumping. I'm like, I don't think people are still investing. A lot of money is coming to the market. It's just going in different areas, and things will shift. Coins that pumped high, like, 200, 300% or more, they will come back down. The other coins will take their place. Everything needs a reset. And this was a good one, and we should go back even higher next year. So, yeah.
Yeah, I'm with you, man. I'm not 100% sure it's over yet. Everything's pointing to it not being. So very interesting time. I mean, next few months is going to be very fascinating to see where things end up. If you could, take 100K fresh, dumping into anything in the top 100, let's say even top 200, where are you putting, how much you're allocating? What does that look like? And let's put a rule on it. You can't rebalance at all for at least a year.
Oh, man. This is going to have to be DeFi coins. So in NFTs too, and I'll give one I'm into now that I kind of really like, that's not in the top 200 and not on exchanges, but I'm gonna say AVAX just because it's been so good to me, and then the price is so far down from where it was. It's kind of the easy, again, it's like a gift that keeps on giving. So I mean, I think it'll be a top 10 coin, and it's just it goes down, 50%. It's hard to 50%. It's hard to not pick it up. So I'll give that one, and I'll say a split 30 to, AVAX, say, I guess 30 to Cardano. Let's do, I don't want to give it, let's say 25 to each, and I guess 30 to ETH. And let's see, we're at 80, so 20. And
so what was that secret coin that's outside of the 200 that you want to throw in?
Okay, so that would be Magic, and they'll probably be happy about getting exposure, but they are it's an NFT metaverse, and they will be going cross chain supposedly, to where people can have different NFT collections and be able to bring those into one marketplace. And also the marketplace token that you would buy these NFTs is called Magic. Magic can be used to as a governance token. It can be used to purchase NFTs. It's used inside the games to do certain things, like create new items, merge items, destroy items, upgrade your characters. So Magic is like the thing that all these games and NFTs will use, and it can be on Osmosis, Arbitrum, Ethereum, Avalanche, and so it's a kind of a metaverse in a metaverse where, and they're having a game come out. I think they went to 300 mil market cap only on SushiSwap and Uniswap, and no one's been noticing it. And it's called a Treasure DAO, and so I bought a $650 NFT from them, and I'm over 25,000 just off that NFT. So I can't I can't give them. I mean, yeah, they went from like 10 million market cap to 300 million. I can't say enough, and the team is big. The marketing director of Osmosis is on it. The guy who created Osmosis is also helping with it, and Olympus DAO is also working with them.
You said that's called Magic, right? I'm just going to make a note of it. Check it out later.
Yeah, so it's Treasure DAO, and Magic is their the token for the DAO.
Awesome. It sounds really cool. It sounds like it's integrating like a whole lot of different aspects that are booming at the moment.
Yeah. Very
cool.
Yeah, that's exactly So it's been the only coin that's been doing good for me. So in this big downturn, so I have to put my money in it. So
yeah, that whole gaming space is blowing up, man. Gaming in general, and to get to 300 million or thereabouts, or getting close at least, without a Binance listing or something else is phenomenal, man. So that's great. Good on them.
They were part of Venture Gold. I don't know if you heard of that. They got listed on Coinbase a few months ago, and they created a loot. It's called Loot. Loot is on a Venture. Loot uses a Venture Gold, and it's a game that got listed on Coinbase. I think it's around 300 million, 350. Well, they were a derivative of Loot, and Loot said, we're not taking these derivatives, we're getting rid of them. And so they'd lost their partnership with Venture Gold, but now they matched their market cap, and they're catching up with them. And the Axie, one of the Axie's hedge fund managers is one of their, Axie co-creator is working with them as well. So I see that. I see Axie at 6 billion, and I'm like, okay, I gotta go with this team. It's too,
Yeah.
they're too good at what they do. But
sounds like a bit of a sleeping giant for sure. I'm going to check that out, man.
Yeah.
Awesome.
It was nice talking to you, David, after knowing your website. And, I guess I kind of know what you did for a long time, but it's nice to finally talk with you.
Yeah, it's really weird because we started talking just because I found you on the Shrimpy chat, and then you'd mentioned that you'd already read articles about me or you'd already been to fucc.io, and I was like, oh my God, my first fan.
Yeah, you disappeared. I don't know. I think you did you remove your account? Because I felt like I couldn't find it again.
From on Shrimpy?
Yeah, on Shrimpy, yeah.
Oh, no, I'm there. Yeah, I have a couple of accounts. I got two. One is the Viking Growth Fund, where I kind of take some of the aspects of momentum, but I also apply some additional analysis, and that's performing really well. That's the one where I'm keeping all of the intricacies proprietary, you know what I mean? I'm not sharing how I'm working all those things out. And then I have my, momentum funds that are still tracking along. The fast lane, which is the one that adjusts every 7 days, is definitely doing the best.
Cool. Yeah. And if you ever want to, discuss more about it, you can.
Yeah, man. I'd love to, man. I can talk about this stuff all day. Like, I think I'd love to have you back on the podcast a little later. And then we can see how your 100K hypothetical portfolio is tracking. And
Sure. Yeah. I guess I'll note it down and check the prices.
Oh yeah. So what was it? It was 25 to AVAX, 25 to Ethereum. No, it was 30 to Ethereum, wasn't it?
30, yeah.
And then 25 to
Cardano.
Cardano, yeah. So that puts us on 80. And then the last 20% was that Magic?
Yeah.
Okay, cool, man. Let's see how we go with that. Exciting.
Cool.
Thanks so much, Connor, for jumping on, man. I really appreciate it. And I know our listeners will get a lot from it. Be sure to check out MainTrade. I'll put all the links in the description in the podcast, and we'll go from there.
Yeah, be awesome. I appreciate it.